Motilal Oswal Financial Services, they reported a strong set of Q2 numbers. The company's revenue surged 23%. Margins expanded 400 basis points sequentially. To talk about the way forward, Raamdeo Agrawal, Chairman, co-founder of Motilal Oswal Financial Services, is with us on the show. Thank you very much for joining in. Numbers have been strong so far. So for the full year, what is the kind of growth that you're targeting? Which business is expected to drive this? And are you expecting any kind of impact from SEBI's stricter F&O regulations?
Yeah, so our Q2 has been very strong. I mean, the top line has been, operating top line has been up by almost 46%, and the bottom line has been up by 53%. Can you hear me?
Yes, we can hear you. Go ahead, Raamdeo.
Yeah. So the operating performance has been fantastic, and it has been strongest. Even sequentially, it is up almost 25%. So I think operating side, it has been growing at about 50%. So that has been the part of the current strength in the capital markets. But I think the real big number is coming from the treasury, which has gone up by almost, in this quarter, we have done about 700 crores plus as a mark-to-market gain, and that takes the total to about 1242. That too after writing off 84 crores for the increase in taxation. So actually for the quarter, the profit could have been about almost 1325 crores. So I think all in all, it's an all-round very strong performance in the operating side as well as on the treasury side.
So Raamdeo, hi, good afternoon. So this is the sort of holdings, unlisted holdings on the books. So the revaluation of that.
Yes, I mean this thing. Motilal Oswal has a very strong treasury book, and all the treasury is invested in equity products, listed as well as unlisted.
Right.
So it is the appreciation in those products which is the treasury gain, for the quarter.
And operationally, if you can give us a sense across business lines, what has been operating profit growth, broking and investment banking?
Growth year on year is about 53%. Yeah, so all of them, whether it is broking, investment banking, wealth management, capital markets, all 4 or 5 of them, asset management, all of them they have grown by almost 50% or over 50%. Only housing finance, in terms of they've done well, but in terms of profit growth, it is just about 10-12%. So rest all the businesses have, capital market businesses have done very well, and that's what takes the entire profit to, top line goes to about 46%, and bottom line goes to be about 53%.
Raamdeo, hi, good afternoon. Great to be speaking with you. And, the numbers are really showing up, and they reflect the optimism that you have on the capital markets theme overall, right? So the business now, I'm looking at the EBITDA margin figure in front of me. Overall, the business is now running at almost a 63-64% margin at a blended level across all businesses. So steady state, if you leave aside the kind of superlative treasury performance, steady state, what is the growth run rate that you see ahead? Say, next 1-2 years at a top line level and also at a, at an earnings level, the net income level. Will the business keep growing at this rate? What could be rough ranges that we can work with?
Yeah, so if you see our last 10 years performance, I cannot say anything about the next 10 years, but last 10 years performance has been about 25% top line growth and 25% bottom line growth. In fact, bottom line growth is more like 40-42%. So I would think that now since margin is optimized, if the top line growth is 25%, we expect about 25% kind of a growth rate, but it doesn't happen in a straight line. Capital market buoyancy is very strong. So last 2-3 years, if you see, they're running at 35-40%. So it all depends how the market shape up. Every month, the industry is getting about 4 million customers. And I believe that from current 175-180 million customers, we are headed to 300 million customers in the next 3, 4, 5 years. If that were to happen, then all the businesses they will not find difficult to grow at about 25%. But it's all dependent on how the markets behave, how the clients behave.
So 25% top line growth and this margin of almost 60%, 65%. Is this also sustainable? I'm talking from a 1-2 year basis. Quarterly variations can happen depending on the market, but sort of from a medium-term perspective.
Yeah, so these margins have also got kind of bumped up because of the large treasury gains. You know, so if you remove that, then the net margin and EBITDA margins will be somewhat more moderate, more like 40-45%. So the business margin, that is definitely going to continue. We have very strong pipeline of business, whether it is issuances, whether it is wealth management, asset management, you name the business, and there is a very good traction right now. So I don't have any problem. I mean, and we have an operating leverage. So actually, if you see, our employee growth is almost at 46%. So clearly, we are building the team big time, and that is where we are not taking the operating margin, operating leverage of the employee cost. So as we go forward, there is a lot of leverage built as we go along, and we are buying a lot of new offices. We are recruiting people at a very senior levels. So we are responding to the market need, because market is just expanding, and the market is saying, give me more bankers, give me more wealth managers, give me more asset managers. So that's what we are trying to fulfill. So this is a very strong tailwinded business we are in right now, and we are trying to do our best in terms of responding to that situation.
Hi, Mr. Agrawal. Good afternoon and good to see you. Help us out with your targets for the home finance business. What is the AUM disbursals that you're looking at in terms of targets? And I'm just looking at it, it appears the yields have come off a little bit and spreads have got a little bit compressed. What's the outlook in terms of growth, in terms of profitability?
Yeah, so this is the first year when our AUM will seriously start growing. From 4,000 odd we closed last year, it is going to close at about 5,000, 4.5 or 4.8 or 5,000 crores in the first year under the new team. And then from there, they will keep growing at an industry rate or a little ahead of that, more like 20%, 25% kind of AUM growth. But what is happening is, there the margin expansion is not happening at this juncture, because we are expanding the team very rapidly. And hence the employee cost is growing at a rapid pace, and that is not allowing the profits to grow. So that's the only place where on a higher top line growth or AUM growth, I'll have a lower profit growth. Yes, but still will have a profit growth, and my ROE from that business also will go up from, say, 10% to 12-13%.
You know, the other thing, Surabhi, is that Motilal results are great, but Motilal is also, the firm has handed out ESOPs to employees. And, I mean, so employees have made a lot of wealth.
Yeah.
I was just looking at the stock. It's gone up 6 times in the last 15 months.
Wow.
6
That's
times,
serious wealth generation.
Raamdeo, so you got smiles all around. I think I can take it that in the office and but so let's just consider the scenario that, because you are dependent on the markets, right? Some of the exchanges that we speak to say that because of these F&O regulations, etc., starting November 20th, it'll all come in a phased manner. It will come. Now, they may be exaggerating. We don't know. They also don't know. But their view is number of volumes can fall, anything upwards of 50% overall. That is what they are saying. So I don't know. I mean, if that were to materialize, what would the impact on the broking capital market side be, in your opinion?
Yeah, so we have tried to do a best guesstimate possible at our end, and since ours is a slightly different model, F&O, we have a cash volume which is larger revenue gathering than the F&O. So we get about of the total capital markets business or broking business, we get 60% from the cash volume and 40% from options. So now, if the cash volumes are not impacted and option volumes go down by 20-30% or maybe 1/3, so our total impact could be say 30% on 40%. So anywhere between 10 to 15, 20% will definitely get shaved off for some time till market find new equilibrium. So we think that 10 to 15% revenue loss could be there, and that will have a very large impact. I mean, like out of that, say, if revenue goes down by 10% from broking, I mean 6-7% would be the loss of profit out there. But broking is only say about 55% of the total revenue. My non-broking revenues are 45%. That remains completely intact. And so the overall impact on the company could be of the order of 5-6% in terms of PAT.
So 10-15% revenue impact? So actually 10-15% impact on the broking revenues, but 6-7% impact on overall net earnings, profits. Okay, possible. That's also, of course, just in the possibility. Go on.
I just wanted to sort of round off by talking about the other business. We spoke about broking, and like you're saying, 40 to 45% is other businesses, including wealth management and private clients, private banking. It's sort of more of a thematic question. We speak to Ashish very, very frequently. I speak to him very frequently on the wealth management side. Now, the only concern is that isn't this getting to be a very crowded space from foreign banks to local institutions to renowned capital market companies like yourself? Everyone wants to get into wealth management. Everyone's looking for top tier talent. Everyone's going into tier 2, tier 3 cities. So is the pie large enough, or is there some fear of maybe a slowdown? At what clip, what is the rate of growth that you're projecting for your wealth management business?
See, Surbhi, this is a very, very seriously large opportunity in the sense that we are talking about, say, right now, wealth base on a $4 trillion GDP, wealth base might be, say, 2 times of GDP. So that is about 8 trillion or 10 trillion. Now, when GDP goes from 4 trillion to 8 trillion, your wealth base will not go 3x. It will go to more like $25-30 trillion. So there will be a lot for everybody to manage. And it's not winner takes it all in the sense that you cannot have some 50-60% market share in a business. So it's a very large business. It's a very physical in the sense that you have to meet one-on-one. Of course, you use a lot of technology. But it's a business which requires a lot of client interaction, and it's a long-term relationship business. So there is a lot of business in the market. It all depends on our competence and our ability to conduct how much we can do it. And that is the story of every aspect of capital market, whether it is broking, whether it is asset management, wealth management, private equity, you name it. And everywhere there is an expansion is going to be sustained. I mean, and it's not 1 or 2 years, it's a decadal opportunity. So, so it's a very transformative for the nation. It's a very large business. So we are very bullish on that. And and everybody will try to get its 2% share, 3% share. And it's not about the share or availability of business. It's all about how much you can manage.
Yeah, it's a large, large opportunity, a big, big pie, I guess, like you're saying. Got it, sir. Thank you very much for joining in and giving us perspective on the business this quarter. And once again, season's greetings. Wish you a very happy Diwali to you, your family, and everybody back in your office as well. Thank you for joining in. There you have it. That's the latest from Motilal Oswal. Guys, I mean, what Mr. Raamdeo was saying on wealth management, because I've talked to wealth managers from private banks to public sector banks to foreign banks to individual boutique firms. Everybody is sharing the same kind of optimism, setting up offices in tier 2, tier 3. Someone's talking about getting clients from Patna. Someone's talking about Bhubaneswar. There's wealth in the kind of pockets that we can't even imagine in this country.
Oh, absolutely. And the wealth managers are going and getting it out.
Getting it all out.
Put it into equities. Well, I think we'll take a quick commercial break here. Rajesh Kothari from Alpha Accurate Advisors will be with us on the other side. Stay with us. Coming back in just a second.